Thank you very much. My name is Jason Jessup. I'm the CEO and co-founder of Magna Mining, and I'm very honored to be here today to present to the group. Just to note of caution, the cautionary statement, there will be some forward-looking statements throughout this presentation. So be aware of that. Some of the things that are said are forward-looking. So Magna Mining was a company created in 2016. I was one of the co-founders, and we are very much a Sudbury-focused nickel company. So our objective is to be the next nickel producer in Sudbury, and we've already heard a little bit about what an amazing mining camp and city that Sudbury is. And we believe that Magna has the right assets to be able to become a hub and spoke production company here. So our flagship asset is the Shakespeare project, which is a past producer feasibility stage project that has major permits in place for a 4,500 ton per day open pit mine mill and tailings storage facility, as well as a greater than 20 million ton indicated nickel copper PGM resource. In August of this year, we announced signing of a definitive agreement to acquire our second asset in Sudbury. This is the Crane Hill mine, and Crane Hill mine is a past producing Inco mine, and we will be releasing a resource on that post-closing, which we expect to happen in the coming weeks. The management and board of our company is very much a Sudbury-focused group with deep roots and experience in the basin. Many of us have worked together in the past at FNX Mining, where we were successful at not only making discoveries, but building mines and operating them successfully here in Sudbury. So really, we look at three pillars of growth, and the first one is development. As I mentioned, Shakespeare is a past producer, so it's very much technically de-risked. It does have the major permits in place for the construction of a mine mill and tailings storage facility. It has also an impact benefit agreement with the Sagamok First Nations. So we believe this is well positioned and a very advanced project that can create that hub of our future vision of a hub and spoke production model. Now, to create the spokes for this production model, we see a couple ways to do that. One is through exploration or an organic discovery. We have a large land package in Sudbury with many exploration targets on it, nickel showings, and we believe that there's potential to have additional deposits similar to Shakespeare on that property. The other way to develop these spokes for this hub and spoke production model is through acquisition. And as I mentioned, we have announced what we consider to be a significant step forward in signing a definitive agreement to acquire the Crane Hill mine. And we believe this is a perfect fit for that first spoke of a future hub and spoke production model. So there's been some talk on Sudbury already tonight, and as was mentioned, Sudbury is a very active mining camp. It is dominated by three major companies, Vale, Glencore, and KGHM. And currently there's 9 mines operating. There's 2 large mills operating as hub and spoke production, similar to what we're envisioning for ourselves. And there are 2 active smelters in the region. Sudbury has a population of about 160,000 people. It has a university and 2 colleges. So there are many technical people here. There are many companies that support mining, as well as contractors and other service providers. There's excellent power. Most of the power comes from hydroelectricity, which is readily available and in close proximity. This is one of the best mining jurisdictions and mining cities, I would believe, in North America. And I think it's one of the best nickel mining camps in the world, and we're very lucky to be here. You can see in blue, this is Magna Mining's property package, about 180 square kilometers currently. And then located in the Shakespeare project's located right here on the western side of the Sudbury Basin. And about 50 road kilometers away, there is the Crane Hill mine, which again, we signed a definitive agreement to acquire that project and the company that owns it. And we hope to be closing that in the coming weeks. So just to look at these two projects and the synergies between them. So Shakespeare, again, a past producer, technically de-risked, feasibility stage. The Crane Hill mine is a past producer, brownfield asset with a long history of production. Currently in reserve at the Shakespeare project, there's just under 12 million tons of reserves, and this was calculated using a $6.50 nickel price based on the closure plan permits we have. That is what we are currently permitted for, which gives it a 7-year mine life. But there are 16.5 million tons of indicated open pit resource also. And we do have those major permits, which we see as very valuable when you're looking at near-term production and the start of construction. So as Crane Hill, we haven't released a resource on it yet, but post-closing of the acquisition, we will release a resource for this project. And I'll get into that in a few slides. As well, the Crane Hill project is a past producer that does have permits still in place. It does have a closure plan as well as a water treatment plant. So a very advanced asset from that perspective. And we believe it's something that can be permitted very readily to have potential near-term production. So Magna Mining, we think, is very uniquely positioned for an Ontario nickel and strategic metal company. We have multiple assets to foster a hub and spoke production model. We have major permits in place, which really can reduce the timelines to production. We have great potential for expansion of our existing resources through more exploration. There are some very high-grade targets, and Sudbury is one of those mining camps where, unless there is a junior such as FNX in the past working this property, their properties, there isn't a lot of news flow coming out of Sudbury. But historically, what FNX had some spectacular deposits and some very high grade. So we believe that there's these type of high grade targets on our Shakespeare property, as well as on the future acquired Crane Hill property. And we also think that there is that potential, again, to have near-term cash flow, both utilizing the permits that we have and potentially one of the two mills that are currently operating in the basin. So our vision is really to combine the Shakespeare mine, which, again, advanced asset permits, potential hub of a hub and spoke model, with this acquisition of the Crane Hill mine and the resource that'll be coming out with that, and it being in relative close proximity and easily truckable to Shakespeare. By putting the two together, we think it could create a very exciting producer in the Sudbury Basin. The feasibility study that was completed earlier this year estimated a capital cost for pre-production of 233 million Canadian. So a reasonable capex for a 4,500 ton per day operation. And we think that by putting that all together, it could be a significant nickel and copper producer in the next 3 to 4 years. So a little bit on Shakespeare and the feasibility study. So this feasibility study was essentially an update of a previous feasibility study that the closure plan and permits were based upon. And we made the strategic decision to constrain the feasibility study to those current permits to avoid needing any material amendments to the closure plan to move into construction. So very similar to the previous feasibility study, it's a 4,500 ton per day operation, under 12 million tons of reserves with a 7-year mine life, producing nickel and copper concentrate. One unique thing that we did include in the feasibility study is we did the calculation of the carbon that would be produced. We did that carbon accounting, and then we offset those with the purchase of carbon offset credits and included that in the operating costs. And what that did was allow us to see what it would look like to have a carbon neutral nickel operation. So that was included in the project. From the base case economics, again, $233 million pre-production capex, a pre-tax NPV of 221 million Canadian, and very, very good cash costs, especially when you consider in the byproducts. We really believe, though, that 7-year mine life and the 12 million tons of reserves has great opportunity to expand, and that 7-year mine life to expand beyond 10 years. This image here shows a long section of the Shakespeare project. In green is the reserve pit shell that was used in the feasibility study. It was calculated at using $6.50 nickel and $3 copper. The dashed blue line is the open pit resource shell. And it was calculated at $7.50 nickel. As you can see, by increasing the value of the nickel price, it allows that pit shape and those pit shells to push deeper, encompassing more of the resource into an open pit resource. Since we've done this, we've done some additional drilling that was not included in the feasibility study, especially in this shallow area between our west zone and our east zone, which showed very consistent mineralization across this area. So we believe by using a slightly higher than $6.50 nickel price for future reserve calculations, by including all the recent drilling, and once that's put together, we believe this blue dashed line will encompass more of the resource that currently falls outside of the open pit to create one large open pit shell, and using higher prices, push that open pit feasibility shell deeper, capturing more resources and more reserves, which ultimately will result in a longer mine life. So we are quite optimistic on the potential at Shakespeare, and exploration continues to expand on resources. Now, the Crane Hill mine, a little bit of background on it. Again, this is the acquisition of Crane Hill has not been completed. We expect it to be completed in the next couple of weeks. And then once that is completed, we will release a technical report outlining the NI 43-101 resources for that project. But it was a past producer, has produced approximately 20 million tons of ore through Inco over a mine life that was on and off over 80 years. The mine closed in 2002. It is a typical Sudbury mine, contact nickel copper mineralization with some very interesting footwall potential. And it also has mineralization identified right to surface. So it does have open pit and underground potential. And it has good metallurgy, well-known metallurgy with no deleterious elements. And we think it could be a perfect fit to either be toll milled through one of the two existing mills that are in Sudbury in the short term, as well as blend in with Shakespeare ore at a future mill at Shakespeare in the future. This is a long section of the Crane Hill mine showing both the mined out stoping areas, the levels and underground infrastructure, as well as some selected drill holes to give a sense of the grades and the widths of mineralization. All these dots that we see here on the screen are color coded by grades and nickel equivalent, as you can see on the right hand side in the legend. And these intersections extend all the way to surface. Some of these holes are old Inco holes, but since the mine's closed, there's been 90,000 meters of drilling, and all of this will be included in the future resource update. Again, historically, there was 20 million tons of ore mined here in those gray shapes. If you look at the range of holes in the areas covered by the existing drilling that will be in the future resource, you can start to understand the scale of what that resource may look like, and it could be quite significant. And we're quite excited to get the deal closed and put those numbers out and continue to drill, expand, and complete additional studies to look at the economics of this project, as well as combining with Shakespeare. So some of our strategic initiatives and some of the opportunities we think there are to follow up and have further discussions with partners such as those on this webinar are opportunities to discuss equity investments. And as we move forward, we will need to have additional equity investments to move projects forward. We will be looking at potential funding partners for project financing, And this could range from, the typical offtake agreements, debt, precious metal, or even potentially cobalt streams, as well as government assistance and support. We have had interest from some parties on asset level partnerships. And earlier this year, we did announce an MOU that is still ongoing with Mitsui for them to acquire a 10 to 12.5% asset interest in the Shakespeare project. Those discussions are still ongoing, and we expect them still to take a few months at least to come to some kind of conclusion. But those are the types of partnerships that we are entertaining, as well as looking at our opportunity to expand on our hub and spoke production model. We think that there are some other opportunities that may present themselves in Sudbury that may be more significant acquisitions than the Crane Hill mine. And we are speaking with various potential partners that may be interested in supporting us in those acquisitions should they come along in the future. So there's a number of different ways that we believe there may be opportunities for future discussion with Magna based along these lines. And that's everything. So thank you very much.